problems with the connection, but it's okay right now, so we can start. With the serious stuff. So we had the introduction to the forex market. That was the first lesson. Second one was about the platform, MT4C Trader. Now you know the tool which is used for trading. And today we'll focus on serious stuff. We start with the technical analysis. And seriously, only after this one seminar, after this one webinar, you will have enough knowledge to spot your first good trades, and you will be able to practice this trading, practice those trades on a demo account, which I hope you already have, that you already have a demo account. If not, please log in on axiori.com and download demo account. Why is it so important? Because the excellence in trading, it comes not from the luck, it comes from the practice. So you need to practice as okay. I am sorry again for this problem. I hope it will be okay now. So, my friends, again, I was saying that you need proper training in order to be successful traders. It will not happen like you will read a book or attend a webinar and then you will make money on the markets. It doesn't work like this. You need knowledge. That's why we are here, but you need practice. That's why you need to go on axiori.com and download a demo platform and practice on a demo platform. Okay, let's go. A short introduction if you haven't been on our first session. So again, my name is Tomasz Wiśniewski. I am a professional trader. I specialize in price action and swing trading. And I have around 10 years of experience on the market. And I've been teaching for a long time. I had a lot of seminars across the globe, from Mexico to Philippines. I've been in Nigeria. I guess that most of the traders come from Nigeria here, so I visited this beautiful country 3 times already. And okay, let's start. So guys, please tell me, what do you think? What is the technical analysis, please? What is the technical analysis? What do you think? There are no bad answers. Every answer is good. Okay, I have so far few answers and all of them are good. Beautiful. So actually, I don't know what am I doing here right now if you know everything. So my job here is done. We can disconnect right now. See you, goodbye. Obviously, I'm joking. So I will show you my approach to the technical analysis. But you are right. So basically, technical analysis is you looking at the chart, you're looking at the indicators, oscillators, you're looking at the technical tools, you're looking at the historical price movements, and based on this you try to estimate if the price will go up or down. So this is the technical analysis, and let's start. Guys, technical analysis is based on three principles, three main principles, three main foundations. I will explain you those on the next slide. In general, technical analysis suggests that the future market movements can be predicted with certain probability. So it's never 100%, it's a certain probability, and those predictions are based on the historical movements. So price was behaving in a particular way, and based on this we can assume that the price will go up or down or sideways, right? Technical analysis should be used on the markets with high liquidity. Why? Who can answer me why technical analysis should be used on the markets with high liquidity? Liquidity means that the market is big, that there's a lot of market participants, a lot of money. And why is it happening like this? Because in order to use technical analysis, you need to see price movements. So if the price is moving, you can apply, if the price is moving correctly, you can apply technical analysis. If you have small cap stocks on some stock exchanges which are not traded, for example, for a few days, then you cannot apply technical analysis because you don't know what the market participants are doing, what they are thinking, what they are trading, right? If nobody's trading. So technical analysis is based on the price movements. If you don't see price movements, then you cannot apply technical analysis. So those foundations of the technical analysis are the same regardless of the type of the asset. And this is the beauty of the technical analysis. That you can use it on various instruments. You can use it on currencies. You can use it on indices. You can use it on the commodities, cryptocurrencies even, right? Bitcoin follows the technical analysis. Bitcoin follows the technical analysis despite the fact that this is a new instrument, relatively new instrument, it still follows technical analysis. Unfortunately, it's subjective. Why it is subjective? Because some of you will see certain pattern on the market and others will not, depending from your general view on the market. If you're bullish, you most probably will see only positive patterns. If you're bearish, you will see negative patterns, okay? So technical analysis, unfortunately, do not defend us from the mistakes which are caused by our mind. How about stocks? Do stocks follow technical analysis? Yes, they do. Recently, okay, everything is good. Yes, guys, at the very beginning, there was a problem with my internet connection, unfortunately, and I'm apologizing for it. But now, if you have problems, unfortunately, it is on your side because I can see my platform. My platform is working, so I have internet. Guys, there was a question if it works on stocks. Yes, it does work on stock. I will tell you my simple strategy. I opened few positions. I created a small portfolio 2 weeks ago, 3 weeks ago on Warsaw Stock Exchange in Poland, and I applied a combination of technical analysis and fundamental analysis. So what I did is I picked the companies, stocks, shares with the best P/E value, and yes, mostly P/E value. I will tell you about this indicator on the fundamental analysis, but in general, the less value the stocks, the price has more chances to go up, right? It's let's say oversold. If P/E value is low, it means that the stock is undersold, oversold, and there is a very big chance that the price will go up. So I picked around 20 or 30 shares like this, and from those I was looking for the best technical situation. Best technical situation out of those picked by the fundamental analysis. And from 30, I picked only 7. And this portfolio, which I created 3 weeks ago, is currently beating the market. Is beating the market because it's not about making profits. Yes, it is on profit around 15%, okay? But at the end of the day, it's about beating the market. Because, for example, if your portfolio is going up 15%, and at the same time, whole market is going 20%, it means that you're not doing good. It means that your portfolio created by a few companies is doing worse than the whole index. So the whole idea of trading stocks is beating the whole index, because if you're not beating the whole index, then there is no point in buying separate companies, right? So for example, if in 1 year whole index went up 20% and your companies went up 25%, it means that you beat the market. But if you made 15%, yes, you still made profits, nice, but less than the whole market. Okay, so again, long story short, I made this combination of fundamentals and technicals. I picked 7 best companies based on the technical analysis, based on the setups, and it's around 15% up, and in the same time index decline. Okay, so the whole index went down, but those selected companies based on the technical analysis, 7 of them made profits. So yes, guys, yes, you will be able to watch this video later. It's being recorded, so you will watch it later. Okay, back to the slides. Technical analysis contains many lagging indicators. Yes, some of the tools are just simply late. So for example, you have a buy signal on Wednesday, and a certain instrument, certain technical tool will tell you about this buy signal next Tuesday, for example. Okay, so some of the instruments are late. Technical analysis is huge. You can use technical analysis, you can use indicators, price action, many more. So I think everyone can find an instrument, indicator, tool for himself. Guys, what are those 3 foundations of the technical analysis? So first one is that price has it all, that market action discounts everything, that everything is priced in. I will explain you this soon. Second foundation is that price follows trends. Price is following trends, period. And the third one is that history likes to repeat itself, and most probably is the most important one. So price has it all. Price discounts everything. Guys, trading technical analysis is based on the fact that you don't need to read the news, you don't need to watch Bloomberg or CNBC in order to be able to estimate what is the sentiment towards one particular instrument. Because technical analysis is based on the fact that price has it all. So all the traders, investors, which have the access to the information, or from the company itself, or from the government, or from the news, they have this information, and based on this information, they trade it. So if they traded, they made how do you call it? They made signs on the chart, right? If the information is good, most of the traders bought based on this information. So naturally, the price will go up. Technical guy, if he sees a chart and he sees that price is going up, he is also buying. He doesn't need to know what information is causing this upswing. Okay, that's the principle. You don't need to know what information is causing upswing or downswing. It's just that you're looking at the chart and you see the upswing, and for you, it's valuable information itself. Okay? So, for example, can you combine technical analysis with fundamentals? Yes, you can. Obviously, yes. And I was telling a story about my portfolio on the stock exchange, which is a combination of technical and fundamental analysis. Guys, price has it all. Sometimes market participants also that price has it all means second thing, that you're not trading the consensus of the price now. What you're trading is the future. You're trading the future. So you are trading the market expectations, what will happen in the future. Look at Tesla, for example. Tesla is producing electric cars. Tesla is much smaller company than Volkswagen, BMW, Mercedes, Toyota, Peugeot, etc. But is valued on the stock exchange more. Why? Because traders are expecting Tesla to be the biggest car company in the future. At some point, it can be bubble, okay? But it's about the expectations. Sometimes expectations are bad. Let's look at this example. So here, this is cable, so British pound to American dollar was going up for almost a year because traders were expecting Bank of England to rise interest rates. That's why they were buying pound. But here, Mark Carney, governor of Bank of England, said that Bank of England will not rise rates, and the price declined. So traders were expecting something, they were pricing in the interest rate rise, but it was false expectations, and the price had to correct this movement. Also, similar situation with the Brexit. Who remembers the Brexit referendum? Who remembers it? This is cable also. Ahead of the Brexit referendum, cable was on long-term highs because market participants were optimistic. They thought that there will be no Brexit, that UK citizens will vote against Brexit. But they were mistaken, and instead of price going up, there was a huge collapse from, let's say, 1 or 2 years highs towards the long-term 30 years lows. So price tries to discount the future, but sometimes they make it in a bad way. The second principle of the technical analysis is that price follows trends. Guys, making trading is really simple if we look at it from the third person perspective. You need to buy low, sell high. You need to sell high, buy low. This principle is pretty simple. It creates trends. Guys, also, what is a trend? What does it mean that price follows trends? Trend. What is a trend? Do you know what is a trend? Yes, the movement of the market, let's say. So the price can go up. It means that more people are buying. Or the price goes down. It means that more people are selling, for example. Okay? So trends. Buy low, sell high. You as a trader want to, for example, look at this symmetric triangle, find a buy signal here on low levels, and close your position here with nice profits. This is a bullish trend in this particular time frame, but this bullish trend in the meantime has, for example, small bearish trend or even smaller bearish trend, or it has also a sideways trend, so the price is moving sideways without any particular direction. Forex market is so nice that it does not only allow you to buy, but it allows you to sell. So, for example, now when you have this coronavirus outbreak, and stocks are going lower, stock traders are crying because they are losing money, but forex traders like you can be happy because for you it's just an occasion, because on the forex market you can sell here and buy here, close your position. All this is your profit. This is a downtrend. As I said, you have also sideways trend. So the price is moving not up, not down, but sideways. Like for example here, how can you use it in your favor? In order to draw line, what do you need in order to draw line? This. What do you need? To draw this line, or this line, or this line, or this line. What do you need, guys, to draw a line? Points, beautiful. You need 2 points to draw a line. Here, here, beautiful. Sorry, it's not straight. So you have a top, top. You have bottom, bottom. You connect this, extend, you connect this, extend. And then the price goes here and here and here. When bounces from this level, you can assume that there will be bounce and the price will approach this level. I am saying this level and this level, but what's the name of this and what is the name of this? Who can tell me? Beautiful, Camille. Thank you very much. Resistance and support. Support is from the bottom here, and the resistance is from the top. So the price is bouncing from the resistance and from the support. And you can do range trading here. For example, here, line, point, point, line. Point, point, line. You can sell here, buy here, sell here, buy here, sell here again, buy, sell. Beautiful, guys. Beautiful, absolutely beautiful. Just simple yet brilliant. Channel trading. So you have this uptrend. In uptrend, what does it mean that there is an uptrend? It means that price goes up, right? Right? Who can tell me why price goes up? Why there's an uptrend? Why? Why price goes up? Good news. Yes, for example, good news. But also, why? Why price goes up? More buyers. Thank you very much. More buyers, less sellers. There is a demand. There is more buyers, so more people are buying. What you should do is you should join them, because those people who are buying are earning money. Here buying, here buying, here they have profits. Here. And people are greedy. They want to buy, they want to earn more money. That's why that's why trends are always continued. Remember, very important thing, trend reverses only once, but can be continued for a long time. So in order to draw a channel, you need 2 lines, 1, 2, 1, 2, extend. Here I showed you that yes, you can sell during the uptrend, but it's risky and it's only to catch a correction. But in reality, what you should do in uptrend, what you can do, what is highly desirable, is to buy on the uptrend line. Buy on the uptrend line, buy on the uptrend line. Like here, buy. Even if we have corrections, in the long term, it is more advisable to go with the trend. I cannot stress this enough, guys. Going with the trend is crucial. It's super important that you follow the trend. I totally know that you will try to go against the trend. Retail traders try to go against the trend. Who can tell me why you, instead of buying here, buying here, buying here, retail traders want to sell here, sell here, sell here? Why? Why you do this, guys? Who can tell me? I know the answer, but tell me if you know. That's also one of the reasons, because you don't want to keep your money for a long time. I'll tell you why you go against the trend. Because we're in an uptrend, like this, you think that if the price would go from here to here, you would get rich very fast. So you are looking for first sign of a reversal because you want to be at the very beginning of the movement, because you want to catch the top. That's why you constantly sell. What you should be doing, yes, there will be a correction, but the price will go up. The price will do this. The price will do this. Because trends are always stronger than the pullback, than the reversal. And remember, reversal happens only once. You want to catch a reversal because you want to catch the top or catch the bottom. In this case, in case of an upswing, you always want to be first. But in reality, you don't have to be first. You just have to join the winners. Join the winners. Join those who earn money. Channel down formation, similar situation, guys. There is a trend. Those who go with the trend are always more profitable. Look, you have this amount of entries here, and for a reversal, you have this. Here you can buy, yes. But look in percentage, 80% of the time, you can enter with the trend and make profit. At the end of the trend, you enter and you make losses, but it's just 20%. Guys, trends can be overwhelming. Look at this. This is American dollar to Polish zloty, my currency. In 2014, a long time ago, we bounced from 3 zlotys for $1. Strong support. And the price went higher. 12 weeks in a row. 12 weeks in a row of an upswing. We went to 340 from 3. Many people were saying, oh, it's too much. The price cannot go forever. This is absolutely too much. Now we should have a reversal. And almost every retail trader was waiting for this. Sell, 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 sell. Well, look what happened. This is the same rectangle. The price did not go down, went higher. From 3, we went to almost 4. Why? Because that was the trend. That was the trend. If you think that it's too much, it's never too much. The price can go even higher. Right? Guys, don't worry if you cannot hear anything. You will be able to watch this webinar again. So don't worry, don't worry, don't worry. Everything is fine. Okay, that was the second principle of the technical analysis, that price follows trends. Third principle is about not getting previous webinars. Guys, please contact Axiori. I will show you the email on the last slide. Please write email to them and they will forward you the link. Just on a quick note here, swing trading. I do swing trading. I use daily chart H4 and H1. Okay, let's go back to the presentation. History likes to repeat itself. It's the most important principle of the technical analysis. So guys, price is mostly influenced by the human emotions. Why? because emotions tell you if you should buy, sell, or hold with your decision. And buy, sell, or hold creates price movements. Simple as this. So emotions dictate price movements. And in the presence of the same or very similar situations, people tend to do the same actions over and over again. People do not change their patterns too often, so they will repeat the same actions all the time. We reacted on the price movements the same in 17th century, in 20th century, and now we do the same things when we see price going up or down. This is why, based on the historical movements, we can have an edge over the market. I am not saying that you will be able to predict the future based on the past, but it gives you an edge. So when you open a platform, it's 50-50 for the price to go up or down, okay? Uh, Okay, I think it's okay with audio. When you open a platform, it's 50-50 for up or down, for the price to go up or down, okay? But with this technical analysis, it changes to 60-40, for example, in your favor, and it's good for you. History likes to repeat itself. Example here. Here you have 4 channel ups in a row. This channel up is a correction. It is not really a channel up, but I showed you channel up before. What is this formation? What's the name of this formation, guys? Who can tell me? Who of my friends can tell me what's the name of this and this and this and this? This is a correction, yes, but correction shaped flag. Thank you, Yoko. This is a flag. Flag is a correction pattern. Here you have a downtrend. So there is a downtrend correction, downtrend correction, downtrend correction, downtrend correction. And correction is shaped like a flag, like a flag, like a flag, like a flag. Thursday, Friday, Monday, Tuesday, Wednesday, Thursday, Friday, Monday, Tuesday, Wednesday, Friday, Thursday, Friday. You can see 1 week, 2 weeks, end of the first week, beginning of the third week. Over 3 weeks of trading, price made 4 the same patterns in a row. Once you see this, okay, nice. You see this, okay, nice. After 2, you can think like, once it's gonna happen again, I'm gonna do this. So you see this and you sell and you made a nice profit. Then you see it again, you sell again, and you make a profit again. Only based on this one pattern, guys. Another example, when history likes to repeat itself. Those corrections are the same, not in terms of the length or type, but in terms of the depth. So this is, let's say, 100 pips, 100 pips, 100 pips. This is beautiful, guys. What time frame did I use? Guys, it is not important. You should not focus about this. It's H1, H1, but those patterns are present all over the place on all time frames. History likes to repeat itself. This correction was around 70 pips, guys. It's Australian dollar to American dollar. I remember this as it was yesterday. Australian dollar to American dollar was in an uptrend, made one correction 70 pips, 70 pips, 70 pips, 70 pips, 70 pips. 1, 2, 3, 4, 5. 5 corrections in a row of 70 pips, guys. Do you think that was it? No. Who can tell me how many corrections did Australian dollar to American dollar make that time? Obviously, you have to guess because you don't know. But how many corrections of 70 pips Australian dollar to American dollar made in a row? I don't believe it. 12. This is exact number. 12, yes, 12 Australian dollar to American dollar made 12 corrections of 70 pips, around 70 pips, 68, 72, right? I don't believe you guessed. I think you were attending one of my previous webinars where I was showing this example. I'm joking. Very nice guess. But guys, can you imagine this? 12 corrections of 70 pips. Is this a pharmacy or it's a financial market? How can price make it? It can, and you have to use it in your favor. Support and resistance. Guys, this is important. Everywhere where you listen or read about the forex market, trading, investing, for sure you hear support and resistance, support and resistance. I showed you this in general, resistance, in general, support. Price goes here. This is a resistance, but after the breakout, it becomes a support. Then price goes here, 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 bounces from the resistance again, and resistance is transferred into a support. This is pretty much it. Supports and resistances can be dynamic or horizontal. What can be support or resistance? Well, significant latest lows or highs. Those can be technical formation lines, like for example, neckline and head and shoulder. Those can be geometrical values, levels like Fibonacci lines, psychological barriers like free zlotys for $1, as you saw on this example, free, as you can see here, here, here. Okay. Trend lines or moving averages. Let me show you my chart. Do you see my platform? No, but you will see soon. Do you see my platform now? Yes. Yes, good stuff. Okay, guys, this is euro dollar, for example. Top of this downtrend. Let's say, well, the real top is here, but the line downtrend. This is a resistance. This is a wedge formation. This is a resistance. This is a support. This is horizontal support, which you can better see here. Support, and support. By the way, who watched my analytical video from today's morning? I told you to follow me on the Twitter, right? I told you on Monday to follow me on Twitter. Yes, I did. And today I posted an analysis about euro dollar. And I said when euro dollar was here, I said that there is a nice reversal pattern, triple bottom formation, bouncing from this horizontal support, and we have big chances for a reversal. And look at this, reversal is happening. Whoa. Is that magic? No, it's not magic. It's technical analysis, guys. I explain on this video why the price will go up. And it is happening right now in front of your eyes. This is my Twitter. Actually, wait. Okay. Wait. I will give you the link to this video that I recorded today. You will be able to watch it later, but in general, that's what's happening, guys, because I don't have 6 sixth sense. So I didn't ask a wizard about this movement. It's purely technical analysis, guys. The price bounced from the support, 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 created reversal pattern, triple bottom formation. Just this, it's not rocket science, my friends. Another instrument. Let's look for another instrument to show you the support and resistance. American dollar, Mexican peso. Upper line of the symmetric triangle is a resistance. Lower line of the symmetric triangle is a support. As you can see, I have it everywhere, everywhere. Support, support, resistance, resistance. Guys, it takes time to learn about this. It takes time to master this, but eventually you will be able to do this. You will have to spend time in front of the computer and see those supports, resistances. That is again the reason why you have to download demo account. I cannot stress this enough, because you need to get familiar with the price movements. After hours spent that you will spend in front of the computer, your eyes will get adjusted to the patterns, to the price movements. It will be much easier for you to find proper patterns. That's why you need to download demo account and look at the charts. Look at the charts. For my technical analysis, I use daily, H4 and H1 time frames. So these are supports, resistance. About formations, we will have a separate webinar about technical formations, so don't worry. Today we will just scratch the surface here, okay? But it will be explained later. Does time frame affect drawing support and resistance line? Thank you for this very important question. I do believe, guys, that bigger time frames, higher time frames like daily or weekly are the most important. So support resistances created on main or on bigger time frames are the most important supports and resistances. Later you downgrade the time frame and the importance of those. Okay, so almost always supports and resistances on daily chart are crucial. Formations work because for ages, not for years, for ages, people traded the same way, and some smart guys analyzed thousands, if not hundreds of thousands of charts, and they found out that price behaves in a particular manner. They labeled those formations, named those formations, and thanks to those smart people, we can now use it in our favor. So for example, head and shoulder formation. Why head and shoulder formation? Because it looks like a head and shoulder. But why? And this formation promotes reversal, promotes bearish reversal. So the price goes up and it promotes a reversal. But why? I can tell you why. Uptrend is price making higher highs and higher lows. All right? This is an uptrend. Price stops to make higher highs and higher lows, makes lower high and lower low. And this is the indication of the end of the uptrend and the start of the downtrend. So head and shoulder does not bring the reversal because it has a fancy name and it has magical power. No, it reverses the trend because it just shows you that the trend is being reversed with lower highs and lower lows. Simple as this, my friends. Few examples of head and shoulder pattern. There is an uptrend, left shoulder, head, left shoulder, and a reversal. Then there is a neckline of this formation. Once the neckline is broken, there is a sell signal. And neckline was a support for some time, and a broken support becomes a resistance and resistance. Neckline is very often tested by the price again. Here is another example. Sideways trend ends with a head and shoulder formation and drop. It cannot get better than this, my friends. It goes the both ways, right? So there is an uptrend and there is a downtrend. There is a formation which ends the uptrend, head and shoulder, but there is a formation which ends the downtrend, so inverse head and shoulder formation. Also, breakout of the neckline upswing. Again, it will be explained more on this special webinar. But inverse head and shoulder formation downswing, inverse head and shoulder formation upswing, head and shoulder formation downswing, from one formation to another. How beautiful is this? Another example, downtrend, inverse left shoulder, head, right shoulder, breakout of the neckline, and upswing. Triangles. Let me tell you a little bit about triangles. Guys, we are approaching to the end of this introduction to the technical analysis. Stay focused, stay focused. We are getting closer to the end. Triangle. The price decreases the volatility. Which side this price will go? Why? There is an exclamation mark here. Why? We don't know, guys, because nobody knows where the price will go. You can say it will go up or down. But again, guys, one important thing, keep that in mind. Very important lesson. You are going to be traders. What traders do? Do traders predict the economy, the value of the GDP or inflation? No, traders have to make money. Okay? You don't care if one currency will be stronger or one weaker. All you care is that you want to make money on this movement. Symmetric triangle tells you that the volatility decreases and we are getting closer to the breakout. Which way will be the breakout? You don't care. You wait. You wait for the breakout of the support or resistance. And symmetric triangle can result with the breakout to the upside, then you buy, or can result with the breakout to the downside and then you sell. It can result in both. But the important thing is that you don't make a decision here inside. You make a decision after the price told you to make a decision. So here or here. All right, all right. Symmetric triangle, downswing, correction, and downswing. Price could reverse, but broke the lower line. You don't place a bet here because it's too risky. You place a bet here when it's more clear. Here, the price continued the trend, but here the price reversed after the triangle. There was an uptrend and it caused a downtrend, symmetric triangle. You don't buy here. You buy here. The price didn't go there, so you didn't buy, but the price went here to the place where you should sell, so you sell. Ascending triangle. Symmetric triangles looks like this. Ascending has a horizontal resistance and dynamic support. Price approaches here, and eventually we get a bullish breakout, like here on this example. Pressure on the resistance rises, and then boom, breakout. Here, descending triangle, the same, but to the other side. Horizontal support, dynamic resistance. Rising pressure on the support, boom, breakout. My friends, very important thing right now. Technical analysis should be based on combining together certain elements to get the whole idea about the future price movements. What I do take into the consideration is not only patterns. I combine few factors, which I will tell you later on next webinars, because remember, we have 9 webinars together. We already had 2, including this one, we had 3, so we have 6 more webinars ahead of us. In reality, it's a little bit complicated, but it's still easy, you will see. Very important thing for you to remember. Traders should not focus on possibility but on probability. Beginners focus on possibility. That's why you want to sell here, because it is possible that the price will go down. Yes, it is possible, but it's more probable that the price will continue to go up. Winners go with probability. Winners do what is more probable for the market. Beginners rely on the possibility to win. That's why they love lotteries. All right? Professional traders bet on the probability. That's why they win in the long term. All right, my friends, now I'm gonna test you guys if you paid attention, if you know what is going on. My friends, JP Morgan chart. What is going to happen here? The price will go up or down? Down, 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 down. The price goes up. Why? Because it is a teaser about the future webinar with indicators and oscillators. Here I showed you MACD, and this indicator combining with breakout of the neckline of the trend line here was promoting the movement to the upside. It will all be clear on the webinar about indicators and oscillators, which are a part of the technical analysis. So you have to just attend this webinar. So the price goes up. But here, what will happen here, my friends? This is easy, you know this, What will happen here? Up, thank you very much, because left shoulder, head, right shoulder, breakout of the neckline, and the price goes up. Yes, inverse head and shoulder formation up. Oh, we have a smart guy here that because the space in the graph down finished. That's how you want to play with me, right? So answer me now, because we are in the middle of the graph. The price will go up or down. But good catch. Thank you very much for this. Good catch. I was waiting for someone to play like this. Up or down here? Down, because of the head and shoulder formation, right? But the price went down only like this. But you will learn this on another webinar about technical formations, because yes, we will have a webinar about technical formations. There is something like a minimum target of the head and shoulder formation, which is measured like this. We measure it from the neckline to the top of the head, and we put it here with the breakout. And this is the minimum target of this formation. So the minimum target was done, and then the price came back to the main trend. There is a good question. If we check the time frame that is bullish and 1 hour is bearish, what should we do? Don't trade. When you should trade only when everything is on your side. When you look at the position and everything points in one direction. You should trade only when you feel this trade inside of your guts. If this trade is scratching your skin, if you cannot resist to open this position, that's when you should trade. Even if that will mean that you can open one position a month, it does not matter, because you should focus on the quality, not quantity. Always quality comes first. So if you have one bearish signal and one bullish signal, you just leave this position. You don't fight with it, you don't trade it. You trade only setups when everything points in one direction. What if you get it wrong? Nothing. If you get it wrong, nothing happens. You lose money. Guys, I make my account is on profit. My account on a market is growing on both Forex market and the stock market. But efficiency of my trades is around 50%. So I make 50% of bad trades. I'm wrong every other time. Efficiency is not important if you are right or wrong. It's not important, guys. You can be wrong. You can make mistakes. You are just human beings. You will make mistakes. Nothing wrong with being wrong. The thing is that what makes you successful and profitable is that when you are right, you are making a lot of money. And when you're wrong, you are losing a little money. This is the most important thing, which again I will teach you on further webinars. I will teach you on next webinars about this. My friends, what about this chart? What will happen here? The price will go up or down? Up. Thank you very much. Why? Because this was an ascending triangle. My friends, I don't want to say anything, but you just had webinars about basics of the Forex market, about how the platform works and this, and you are able to estimate the good direction here. So no worries. You will do this perfectly if you can do this nicely just after 3 lessons. Are you saying that all time frames must rally before placing a trade with your technical analysis? No, I'm not exactly saying this because, for example, but it's a bit, it's more advanced topic, so I'll just scratch the surface here because I want to focus on the basics of the technical analysis. So this is, let's say, H4 chart, this one. It's bullish. But if I will turn on H1, it will look like this. Okay, because on H1, we will see only this, let's say. So this is it. So on H1, this will be bearish. So in theory, I shouldn't open a position. But if on H1 we are bearish, but we create this, for example, this is inverse head and shoulder formation, which shows on smaller time frame that on bigger time frame this correction may be coming to an end and we can have an upswing. Okay, again, I will explain you this on next webinars. What about now? What is happening here? What is this formation? What are your predictions? What are your predictions here, my friends? Up, up, up. No, my friends. What is this formation? What is this formation? Quick reminder for you. Flag, thank you. What happens when there is a downtrend and the price breaks the lower line of the flag? What happens here? We have 4 declines. Let's come back here. Downtrend. Why downtrend? Because the price is making lower lows and lower highs. We have a flag and a breakout of the lower line of the flag. What happens is a nice, fat, profitable drop. All right. I hope you enjoyed the introduction to the technical analysis. If you still don't follow me or Axiori on Twitter, you are making a huge mistake, which I showed you on this euro-dollar situation. So follow me on Twitter. You will get a lot of ideas, not recommendations, because I don't give recommendations. I just share my view. All those formations work on most of the time frames. I do believe that M5 or M15 is a market noise and nothing works there. I do believe that formations work on M30, H1, H4, D1, or weekly on all liquid instruments, commodities, forex, shares, indexes. What's the best time of day to trade? I don't trade during one particular time of the day. I just look at the charts from time to time and look for occasions. All right, this is Twitter, my friends. This is mail. If you want recording of this webinar, please write to Axiori to support at axiori.com. If you have any questions, please write to this email address too. Okay, there's a bunch of guys who want to help you there. Also, they will give you recordings for the recent videos. This is awesome. So if you want recordings of this or previous videos, please write to support at axiori.com. Technical analysis is suitable for gold and other commodities. I love trading gold. You see, do we have to buy Tesla today? Due to this disclaimer, I will never ever tell you if you should or have to buy or sell something, anything. I will never do this because it is forbidden by law. What I can do at most is tell you that situation on Tesla, blah, 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 looks very interesting, blah, blah, blah. This is all I can because I don't want to go to prison. Okay, and I don't know what's the situation on Tesla. I just know that they skyrocket. I have other companies which you never heard about because they are from Warsaw Stock Exchange. So I will not waste your time naming those companies, my friends. But guys, companies you can trade on the stock exchange. On MetaTrader, you have CFDs of indexes, forex, commodities. And yes, on some of them you have American companies also. So there is a lot of instruments which you can use, which is actually awesome. You can trade everything. By the way, on the video that I send you link on the chat, I also talked about American dollar to Canadian dollar, which I said that most probably will go up, and American dollar to Mexican peso, which I said that most probably they will go up as well, and they are going up. 3 great trading occasions. This is why you need to follow. All right, my friends. We see each other on Monday. On Monday, we will talk about fundamental analysis. Then on Tuesday, on Wednesday again, and on Thursday again. We finished the first week of webinars, 3 webinars behind us, 6 ahead of us. So stay strong, stay with us, because you can see that every single webinar you get more and more knowledge. Thank you, my friends. All the best, and have a nice weekend, and see you on Monday.